Hello everyone, my name is Bukky. Welcome to my channel. You're the one place where you learn about personal finance and career. And today I'll be talking about 3 most important lessons I learned about investment this year. Okay, we are almost towards the end of the year, and then it's a time whereby we should reflect, or you should be reflecting about the decisions you've made this year. What are your lessons learned? What can you do better in the coming year and going forward? And that's why I believe this video should help you on your own reflections, as well as I will be sharing with you the things I've learned about investment this year. So if you're new to my channel, you're welcome. This is the applause for you. And if you are a returnee person, you're also welcome again and again. And this is the applause for you. And do not forget to like this video, click on the subscription button and also on the notification button, and drop your comments in the course of the video. All right, let's take a deep dive into the topic of today. So the number one thing, or the number one lesson I learned about investment this year was that cash is king. Yes, cash is king. And this became even more profound when WHO declared the COVID-19 a pandemic, like a worldwide issue. And what happened at that point was that the whole market, whether in DAX, in the S&P 500, the NASDAQ, the 50, 100, 250, everything went down south. In fact, S&P 500 went as far as between 25% or 30%. Okay, so and what I learned there was that if I had cash, or let me say if I had enough cash during that time, it was a perfect time for me to invest in the market. Because if you have cash during the time the whole market went down, it is a very good time for you to actually step into that market and take advantage of it, especially for premium stocks that you've been eyeing for a while. And why is it important? Why is that so? It's so because, for example, let me use an example. In Nigeria, the most premium stock is Nestle Nigeria. And before the pandemic, it was trading around 1,002-ish naira, right? And then the pandemic happened in March, and I think it went as low as 750 to 840 thereabouts. Okay. At that price, that's almost like 35% or 40% drop in price. And that drop in price is not based on anything Nestle Nigeria did. It was just what's happening in the world. It's a macroeconomic issue. Now, it's not just about having the cash, it's also about staying liquid. Okay, so if you have, so you might not have cash at that point, but if you have some liquid assets that you can easily convert, right, into stocks to purchase those premium things, you could have done this, because the point will be that, okay, when the market went down, you bought it, and then now that, for example, Nestle Nigeria is around 1,004, 1,003 thereabout, you can sell it and then go back, move back. You can sell part of it, move the amount that you used as cash to invest back into the account of the cash account, and then you still have some stocks left of Nestle Nigeria. And that's it. You've made your gains, you've recovered your cash, and everybody's okay. You're okay, your assets is okay, your cash is fine. All right, so that was the first lesson I learned, that, oh, maybe I should pay attention more into staying more liquid and having some cash available. The second lesson that I learned was that, do not follow the herd, like don't follow the crowd. And so if you're asking me, if I shouldn't follow the crowd, what should I follow, or who should I follow? Well, follow yourself. And don't just follow yourself blindly. You will have to follow yourself because you have some strategy. You cannot be investing and don't have a strategy for your investment. But don't ever follow the herd in terms of, okay, people are selling, then I would sell off. So you want to be sure that you have your own personal conviction and you have your own research, saying, okay, so why are people selling off this particular stock? Is it because there is a fraud in that company? Is it because the company is going bankrupt? Is it because something happened with that company that is the undoing of that particular company itself? Or is it just a market issue that it's not the fault of the company? Okay, just like the example I shared about Nestle earlier. So you have to be very conscious that you're not following the herd. And how I learned this lesson in a hard way was that there was a particular stock I bought, and I bought it not because I did research. I just saw that, okay, people were talking on various platforms, people were talking about that particular stock. And then a friend then called me and said, have you heard this and this? You know, I'm buying. I said, okay. And then without doing my own research, I went ahead and I bought. Now, a day after I bought, the news that made everyone started buying that stock has died down a little bit, which means the stock also went down. And that was for me saying, you know what, I should have, when that friend called me to invest in that particular company, I should have taken my time to see why at all is this company's price rising, right? Why is everybody going after this company, or why is everybody, you know, selling, you know? So because if I had done that, I would know that, okay, the price is being driven because of a particular news, and I know that when the news dies down, the price would come back to some normal, and then I can step in if I want to invest in that company at that point, not at the higher price where everybody's buying. Okay, so that's the second lesson I learned in the hard way in this year. The third thing I learned the hard way is about not investing on impulse. Don't do it, like, don't invest at all on impulse. By the way, talking about impulsive investing, I also made a video about impulsive buying. Go to this video, the link is here. Go to that video and see how you can save money annually on impulsive buying if you're the type that buys a lot. Okay, so back to our discussion. Make sure you have a strategy whenever you are investing. Make sure that when you identify a company that you want to invest in, don't just invest in it because of the herd syndrome. No, don't do that. Because the herd syndrome would lead you to do impulsive buying, just like I did in the example I just gave right now. If you believe that stock is worth buying, sit down. Give yourself reasons why you think it's worth buying. And then the reasons, of course, would be based on the financials of that company, on the growth perspective of that company, on what value the company is bringing, you know, to humanity. What are they selling? You want to look at those things. Based on that, those should be your driving force for deciding to buy that particular stock. And then close the book or the journal where you had those points. Take a deep breath. You can take a walk, and then you can even take a nap on it, sleep over it, and see if you're still very convinced about the decisions or the reasons you gave out. If you're still convinced, then go for it. And if you do that on the stocks you buy, right, you do your research, you look at the financials, you write reasons down why you think it's a good buy, you would see that the level at which you impulse buy would reduce. And impulsive buying could actually cost you losses, right? Because most times when we impulse buy because we see that the price is rising, and we don't want to, like, miss out on it. And at that time, when most of us get to know about that price, the market forces are already calculated into that price, so that price is not favorable for you. That's why you should not do impulsive buying. Think more about what you want to buy, and then you will see the results for yourself. And that was my third lesson about investing in this year 2020. All right, guys, so I'm going to stop here, but before I leave, I would like to ask you, what are your own important lessons that you learned about investment in this year? Drop them in your comments. I would like to hear from you. I can chat with you, and I'll be so happy that you could share with others. You know, people can learn from you what you learned about investment this year. And my fourth pro tip I will give to you would be that you should have an investment journal, right? Write your investment down, track it, and that way you can know, okay, where are you making gains and where are you not making gains, and that would help you in building up or making decisions about your whole portfolio. Okay, so I'm going to stop there for real, and don't go away. There are a lot of videos on my channel about investing, saving, budgeting, and also about career. how to get the next job, how to find the right job for you, how to be happy on your job, how to answer what is your salary expectation. And I hope you enjoyed those, and I will see you again in the next video. Bye bye.